Sweet. Hey everybody, I'm John Ellison. I'm one of the co-founders of The Good Host. And as John Fagan mentioned earlier, I've been hanging around this community for a couple of years now, bouncing back and forth between here and the States, doing a lot of product work for some Silicon Valley tech companies, and I'm now doing something here in Norwich, and I love it. I love this community and love this place, and I'm really happy to be here. So thanks to John and Sean and everybody who puts this event on. I think it's a really important part of cultivating a good startup culture in Norwich. So this is a different kind of pitch. I'm not asking for investment. I don't want you to invest in my company. I am going to ask that you invest in your financial freedom. And I'm going to give you a really easy way to do that. So let's imagine this, right? A lot of you people are in tech startups of some kind or another. Imagine you're on your way back from San Francisco. You just met with your acquirer. You've got due diligence coming up, and you know that most likely you're due a significant payout. Probably not enough money to sit on for the rest of your life, but enough money to know that you need to do something with it, right? I found myself in a similar position. I didn't start the company, but I ended up doing well out of an acquisition, and I needed to figure out how to plan for my future. So I have this problem statement, right, of how can I grow wealth for the long term while giving me freedom to do what I love right now. I know it's a very first world problem. There's lots of other more relevant problems to worry about and care about, but this is something that I think a lot of people face, of how do you have financial freedom to do the things that you love, and maybe also do a little bit of good along the way too. So I'm going to introduce some boring shit about investing. You can nod off if you want to, but I read books and books and books about this stuff. Like, okay, what do you do with money? How do you grow wealth? How do you manage risk? How do you manage volatility? How do you make things happen in a positive direction? And what I learned is that you can buy assets or you can buy liabilities. Liabilities decrease in value over time and assets increase. That's kind of the basics of it. And most people, when they get money, they buy cars and liabilities that cost money. But if you want to buy assets, you've got a handful of choices or asset categories. You can keep your stuff in cash, and that's going to corrode due to inflation, 2 to 3% per year. You'll lose your purchasing power. You can buy corporate or government bonds, which give you fixed income, but again, that's really just a hedge against inflation. Or you can go into property, which gives you an interesting balance because it provides capital growth. You can grow the value of your money and also get income in return. It's a little bit riskier, it's less liquid, or you can go into equities. You can buy stuff on the public stock market, or you can invest in a private company and get some significant returns there, but it's a little bit higher risk and much higher volatility. So what I learned is that I need to design a diversified investment portfolio that matches my personal objectives. And what I discovered in my research is that property is quite an amazing asset, especially in the UK, because of your ability to manage volatility, and if you manage it properly with something like service accommodation, furnished holiday lets, or even houses of multiple occupancy. If you've got student lets, there's a bunch of different ways to do it, but you can get 10 to 15% yield on your money per annum, which is really competitive to even the US stock market over the last 30 years. And it unlocks something known as leverage, which basically means you get to invest with somebody else's money. In this instance, it's the bank, right? And so if you have £1 million to invest and you buy in 3-to-1 leverage, you've got £3 million worth of assets that you can grow 10 to 15% yield, and then the capital growth on top. So it's this amazing mix. And a lot of people don't realize the power, especially within the UK, because you have these economic factors of massive growth in demand, more and more people wanting houses, and a relatively fixed supply. So the UK property market represents an amazing opportunity. There's some downside of investing. It's not the best for everybody. Tax regulation changes make it hard, and obviously there's opportunity cost. You can't just log on to Vanguard and buy a house and be done with it, right? You got to manage this stuff. There's really two kind of main investing strategies in my last investing slide. Don't worry, you can wake up in a sec. You can buy something below market value in bad condition, flip it, and then sell it and get rich quickly. Or you can buy and hold an asset for the long term and get rich slowly. And in this buy and hold, there's kind of two main tactics. You can buy something and let it out on a long-term basis, which is what most people do over 6 to 12-month contracts. Or what a lot of people in the United States are doing now is rent it out on a short-term basis to guests from as little as 1 day and sometimes up to 3 months. So I started looking at this short-term rental thing. And at the same time, I met my buddy Ollie, who wanted to go traveling for a year. And he told me that his estate agent came over and gave a rental valuation that after his fees left him with little less than £600 a month, which wasn't really much to get excited about because he'd have to store all his furniture. So he's talking to me about what I do with my house. And I was like, man, just put it on Airbnb, find somebody to manage it. But there was nobody in Norwich who would do it all for him. And so he didn't really want the hassle of managing it. I was worth taking an experiment. So I was like, all right, let's run a pilot. Let's put your house up on Airbnb. I'll manage it, and we'll see what happens. We got his house listed on the market, and it's a nice place. He did well to renovate it himself and get it ready really, really quickly. And then something interesting happened. We got 1,500 pounds of bookings in 13 days. 90 days were booked in a row. And we were both like, whoa, what's going on here? And it just got better and better and better. And as I started to kind of look into the details, this is the 6-month actual earnings of this pilot property. You can see that this is the net income from Airbnb management minus the fees, right? We're calling it the good host, versus what the estate agent was promising. And over a 6-month period, in the lowest 6 months of the year, 76% better net return. It's quite substantial, right? We got excited about this. And as I started looking deeper and deeper into the market dynamics, I realized that Norwich is actually an incredible market, and nobody knows about it. Kind of like Norwich as a city. You know, a lot of people in the UK don't even know where Norwich is. It's funny, but it's true. Talking to Norwich bid people, you know, you've got a branding issue here. But there's an amazing potential. There's growth in both rental demand and in rental value, and actually has this amazing aspect where it has very low seasonal variation. Meaning from January, December versus July and August, you've got pretty consistent income in the short-term rental market. And there's no regulation currently in place. That'll probably change if you look at Liverpool and London and Manchester. But the average property on the short-term rental market in Norwich is earning £85 a night. And the average occupancy rate is 85%. It's a really solid metric for any given market. And you can see the rental growth over time is skyrocketing. It's 7% quarterly over the time in the market, and there's 380 properties in Norwich, and nobody's doing this service as a full service management professionally. So Ollie and I looked at each other. We both run other businesses. He is an operations expert, manages teams of paramedics all over the country, and we're like, man, let's do this thing. Let's create a business. Let's capture this opportunity and see what happens. So we created the Good Host, and our offering to investors, property owners, is to get 30% better returns compared to a long-term let. We do everything for you, everything. So once you get your property listed, you just get the money coming in every month. You get a dedicated property manager, and you get people cleaning your property up to a really high standard several times a week, right? It's going to be in great condition, and if you own your assets as an individual, you get significant tax advantages that you can take advantage of. So how does it work? The first part is talking to us. We'll draft a contract and ultimately work with you through some nitty-gritty details of listing your property, but once it's up, you get to step back and do whatever you want. And then we go ahead and manage the whole process of hosting guests through every single detail, from a guest booking, checking in, any guest questions or concerns, checking out, and then managing the cleaning and turnover process. So you might think like, hey, couldn't I just do this myself? And yeah, you totally could. If you like vacuuming and changing linens and managing guest communications, totally, go for it. If you're trying to build a portfolio, you're probably not going to have much time on your hands. It depends how you value your time and what you want to do with it. What we do as a company, so again, looking at some of the things that people do with tech companies, we leverage APIs to give you access to hundreds and hundreds of thousands of guests all around the world on big markets. So it's not just Airbnb or just Booking.com. It's literally 1,000 different providers that provide guests into your property, and we manage it all for you. We leverage algorithms and big data to optimize your pricing so that every single night of the week you're getting the absolute maximum that you can. And we use automation to make sure that workflows happen in a quality way and at scale, so that you can just rest assured that things are going to get done right. So I won't go into a lot of detail about going to market strategy. We're not trying to take over the world here. We're going to start in Norwich and make customers happy. We're going to hopefully grow slowly and steadily. We've done our pilot test with Ollie's property. We're currently in process of onboarding 12 properties, seeing how that goes. We really want to hit a maximum revenue per available rental day for those properties. And then we're going to go out into a public launch in partnership with local estate agents and developers. So this is kind of where we're at. We'll see where it goes. Yeah, this is one of the other properties that we're onboarding. You can kind of see the quality and the aesthetic of a space that is required to really perform well in a short-term rental market. Again, this is me and Ollie. I've got experience running tech companies, and Ollie is an operations guru. We seem to work well together, and we're slowly growing out a team to help us. So here's the case for investment, right? If you do happen to have some money lying around, say 60 grand, you can get a 2-bed, 2-bath in Norwich, just north of the city in NR3. Assuming a 25/75 loan to value, this is your cash flow and yield. I won't go into the detail, but that yield figure is almost 16%. And that's pretty well validated across several data points in the market. If you're looking at the portfolio growth over 5 years, this is your portfolio value over time, assuming that you sell at the end of a given year. And this is including tax, right? So buy it today at 170, 185, and you will end up, after investing 60K, with 264,000 pounds, which is a 350% return on investment. And that's just with 60K. Imagine if you had more. If you don't have loads of cash lying around, good for you. You don't have to in order to get started. If you've got a house, if you own it, or even if you rent it, go traveling for a year. Do the digital nomad thing. Let us manage it, and you'll probably make more money off of your property than you spend abroad, depending upon how you travel. Or you can do a rent-to-rent arrangement. Find a landlord that you know and get them to rent it to you, and then have us manage it and get the money on top. You can do a joint venture with an investor, or there's special types of purchasing options which really require no money up front, that you can use other people's money or the bank's money in order to complete. So this is my case to you. If you've got £1 million to investate across all the companies pitching, you can go high risk and high return with a private equity company by investing in a startup, or you can invest in a short-term rental property in Norwich. This is just a really joke graph showing the startup survival curve in the US. And yeah, it's not great, but the UK property market's pretty strong. So I'm just joking here, it's just the case. But if you're interested in working with us and you've got a property or want to get into the market, we're happy to chat. And also we're looking for a web developer on a freelance basis to help us with the next step. And I'm also looking for a PA, so if anybody knows, let us know. So thanks for your time today, appreciate it.